So welcome to our 8th Longview Conversations with podcast. This is the podcast where we interview interesting investors, traders, accounting specialists, strategists, geopolitical commentators, and all kinds of people who have expert insights into factors that might move global markets. That's what we're interested in. And this week, it's an absolute pleasure to host and have Wolfgang Munchau on the show. Welcome, Wolfgang. Lovely to see you. Thank you for joining us.
Chris, thank you for the invitation.
Wolfgang is, to those that don't know you, I'm sure most of you do, is the co-founder of EuroIntelligence, which I sort of loosely describe, and I'm sure Wolfgang will correct me in a minute, but as a sort of a consultancy that keeps you up to speed on all things EU and Euro area, whether it's macro or politics, and keeping investors abreast of what they need to know. Of course, Wolfgang is well known for his column in the FT from, I think, 2003 to 2020, which was a well-read, widely read column, somewhat controversial at times, but on the money often and regularly and typically. And of course, you had a whole variety of other roles when you were at the FT and a whole variety of roles since then. So great to have you on, Wolfgang. Anything you want to add to that, please do.
No, Chris, you did a fantastic introduction. This is all that needs to be said for now.
Fantastic. Great. Well, let's tuck in because we're going to dig into the European expertise, which, of course, is your main bag. And let's start with the Euro area. Of course, it's been an amazing 24 hours, literally, in Europe over the past day. We've had the Dutch election results last night with Geert Wilders getting a larger number of seats than we expected, the biggest party in Holland, which is kind of quite a statement and quite a bit of a seismic shock for European politics. And then, of course, over in Germany, we've had the issues with the budget and the constitutional court ruling that's really created a bit of a political maelstrom there. I suppose starting, we're going to dig into those in real detail, but going even bigger picture than that, how is the Eurozone at the moment? How's the project going? What do those events say about the project? And how do you see its future? Is it well embedded, looking good, or are there storms ahead?
Yeah, I mean, Chris, when you mentioned I've been writing about the Eurozone essentially since professionally since the late 1980s, and when it was created, I was initially very optimistic because I saw a broad political consensus behind not just the euro as a currency, but also behind what it was officially still called European monetary and economic integration, and it's actually called the Economic and Monetary Union. And they've kind of lost interest in this project after it started. One has to be quite honest. The minute it started, they got themselves, Barroso as the Commission president. He was mostly interested in structural reforms, which was, fine as it went, but it didn't really. It was a massive waste of time because it didn't bring much. It didn't have much progress. But most importantly, it deflected from the urgent need to complete the Eurozone. And then what happened in the subsequent years, we all know about the crisis. That was partly the result of not doing this work. And then they created ad hoc a number of sort of crisis mechanisms, like the European Stability Mechanism. The ECB got itself a couple of instruments, like the outright monetary transactions, which Mario Draghi introduced in 2012 in his famous, whatever it takes speech. Instrument was never used, never legislated. It's kind of I always called it a bit of a fairy dust type policy. Maybe it may be unrolled, it may not be. There are significant obstacles to this, and then obviously the whole QE period started, and the PEP period, the Pandemic Emergency Purchase Program. So there were a number of things that they have in place now, but not the thing you need in order to stabilize. This is the world's second largest economy, and it's not just subject to financial stress. It's subject to economic stress. It's subject to structural issues. It's subject to political shocks, the kind of which you mentioned. One of them we saw yesterday. There are an awful lot of shocks. Most shocks we will not know when they come, but the reason why countries like the United States or the UK are stable is because they have stable institutions. They don't only have a Bank of England, they also have a treasury, they have a government, They have people who can take decisions. The Eurozone does not have that. It has very legalistic procedures. For example, the ECB's program for bailing out a country in difficulty. It's called the TPI, the Transmission Protocol Instruments. I always have to look these names up. They're these acronyms.
Yeah.
It's not that they're difficult, but it's just that they're in many ways funny, because people actually said TPI stands for to protect Italy, and that in many ways
very good. Yeah,
would actually characterize what it is meant to do, because you wouldn't have it for any of the smaller countries, but obviously Italy is the big one. The Eurozone can clearly not afford to have a crisis in Italy, because Italy is too large. That it would be unthinkable in terms of the financial and economic implications of any sort of accident there. So they need something in place. But if you actually look at the conditions for its trigger, as I've been sort of doing repeatedly in the last 2 weeks, going back to what was agreed at the time, and I said reasonable people can disagree whether these conditions are met. It says that sustainability, sensible macroeconomic policies, Italy not being subject to an excessive deficit procedure in the EU, or if it is, that it is deemed to take all the steps. People might, in all of these points, even reasonable people can come to very different conclusions. And it's quite possible that a majority on the ECB's governing council might say that Italy hasn't met those things, depending on the circumstances under which a crisis would arise. If it were arise in normal times, I'd say they will do this. But if there was sort of a period, or sort of a Greek-style period of another sort of fiscal shock, something that happened, some political, extravagance, people might be very, very reluctant to do this. And now that we have, much more conservative governments in place in the Netherlands, and and ultimately on the fiscal side also in Germany. Germany is fiscally extremely restrictive, and you mentioned the Constitutional Court's ruling that it will get worse. So you have a situation where I see massive divergence ahead on fiscal policy, and that is only because we haven't fixed those issues with the Eurozone. And yesterday, another event that happened this week, the European Parliament agreed to vote on its proposals for treaty change, and that's all and well. But it's instead of fixing the problems that they created with the euro, now they want to have they want to expand into defense. So we'll have another area that they will start and not complete. And they want to start, expand into climate protection, healthcare. So there's a huge power grab going on. But, for me, the question is not so much, is it national sovereignty versus European sovereignty? For me, the question is, considering that they haven't done the euro well, should they not really, finish this project first before they, mess up the next one? And I think that is sort of the bottom line. And I think there is a potential for a crisis. I had to answer your initial question, and it will happen. And when it happens, we will be totally shocked and surprised, and as we were last time.
Interesting. So, because of course, like yourself, we've been following this European story for a long period of time, and for as long as I can remember, it's the demise of the euro. I think, and I've been in that camp, suggesting it myself. And of course, the euro crisis was perhaps the peak of that in recent times. But what you're suggesting then is that the structural setup, because it's incomplete, creates and leaves vulnerabilities. Is that essentially the nub of what you're saying? It's not a complete sovereign area as we see in the UK and the US. It's an area that continues. But is there not an argument this is simply the European way? And as we saw in the euro crisis, when the chips are down, the response comes, and Draghi's whatever it takes, as you mentioned, for example. And at the time, I remember the solutions were surprising. We all thought they were outside the constitutional permissioning of the way the ECB, etc., was set up. But I mean, so is that sort of, is there not a European way that maybe this situation is working? And you mentioned the security, so the Europeans are simply continuing to build. You're right, not everything's finished. The fiscal union, of course, isn't. The banking union isn't, and now we've got a security union that isn't. But the work is happening. Is there not an argument? Is there not an optimistic tone one could take that maybe the euro and sorry, Wolfgang, to finish. I mean, I haven't checked recent polls, but certainly a lot of the polls of Eurozone countries, the people want the euro. Even in Italy, the majority seem to want the euro.
No, that's right. There is no sort of demand for a demise of the euro. And you're right also about the European way, because when the euro was introduced, a lot of people believed and persuaded themselves and each other that was it. No more integration was needed. We can have a single monetary union and a diverse, not a fiscal union, but fiscal rules instead of a union, and you can both work together. That's sort of the way the Europeans do things, because they still like to have the member states and the governments and the prime ministers to take the main decisions, and not somebody in Brussels. The problem with this, and you are also right to say that Mario Draghi, when it came to the crisis, they did, at least they got us out of this emergency that was clearly the case in late 2011 until the middle of 2012. That was sort of the acute phase of the Eurozone crisis. And during that period, it was indeed possible that the euro could have collapsed. There were circumstances, and I know of people in very, very high places in those times who actually expected that too, who never admitted that in public, but who themselves said, yes, this is now possible. And when Draghi did his offer of a bailout, that was very much a realization of the danger. The problem with this, the idea that, in the end they will always do that, is that we had Draghi then. If we've had, say, a German, at the time a German ECB president, that would not have happened. It's not that the German ECB president, I mean, at the time there was also the possibility of Weber, the Bundesbank president, becoming ECB president. He kind of ruled himself out. But if Axel Weber had become the ECB president at that time, he would not have done this. He would probably have compromised on many things. But what Draghi did wasn't so much reluctantly agreeing to something his colleagues proposed. It was him taking the lead and bringing his colleagues on board. Weber would not have done that. And I don't think Trichet would have done that either. And whether Lagarde would have done that, it's open to speculation, because it's a counterfactual thing, but it depends very much on the kind of people you have at that moment. There was also a moment when I recall when Obama told Merkel in no uncertain terms that she really needed to shift position on some of these instruments, for otherwise there would be a global financial crisis that she would be held responsible for. And I remember there was a very emotional exchange between her and him on these very issues, and she relented. But it is possible that a German government, a chancellor had been in charge who would not have had either the inclination to do that, or who would not have had the domestic majorities to do that. For example, right now, it's very difficult for Germany, and even though Scholz, for all his faults, and I could listen, we could have a long conversation on that, but for all his faults, he is a pro-European, at least sort of instinctively pro-European. He's not, he's never said anything anti-European. He's not. He has his allies. He seems to get on well with Meloni, who visited. Whom he visited yesterday. So they have a reasonable rapport, and he's But the problem is that his coalition does not give him much scope. So so if he was in the situation where he would have to agree a large bailout to a third country at a time when his own government cannot even. They're discussing subsidies they had already promised, like the 10 billion they promised to Intel to build a chip factory. That's now up for grabs, basically. Or the electricity subsidy they had already proudly announced the week earlier for large industry. Now, how can a country that is basically, been told that it cannot do its, it's basically telling your government, the 5 things it wanted to do, it can't do anymore because, of a court ruling. In the UK, that's different. I mean, we saw when the UK court, the Supreme Court, ruled on the same day when the German, on Rwanda, when the German Constitutional Court ruled on the budget, and the UK the reaction of the UK government was say, so, scratch that, let's pass a law to declare Rwanda safe, and the Supreme Court simply has to take that as, as an expression of parliamentary, we established the facts through legislation. That cannot happen in Germany. There's no way the German government can simply overrule the court in this way. There's a different distribution of power. So the problem with your they will always do this scenario is that, you've been lucky once. And we've been very lucky. But as we see in the politics of Europe, accidents happen now all the time. There are more and more accidents happen. Like Viktor Orban is, from the perspective of 2000, he was already prime minister in 2012, but he was nothing like what he is today. Geert Wilders, if he were to become prime minister of the Netherlands, there's no way he would agree to a bailout. The current German government could not agree to a bailout. So you would have a very different circumstance. You would also find an European Central Bank in a different position. Back in 2012, the Eurozone, like other countries, had deflation or disinflation. Inflation was below the target. And, when your inflation is below the target, buying assets makes sense because it allows you to shift the, and interest rates were already very low. They were, close to zero. In time like this, the buying assets lifts the long-term bond yields. It makes no sense to do this now because and this is the problem with the TPI. Do we really want to depress long-term bond yields at the time when the ECB itself feels that governments are running too tight to lose a fiscal policy? Why would we want to reduce? I mean, the high interest rates at the long end, in particular, for as long as they're not too extreme, are kind of a feature, not a bug of the system. So I doubt that we will have a similar scenario again if we go into a similar crisis. And the reaction function, and it could happen by accident. Someone just makes a mistake, and suddenly the bond market seizes up, and the country gets out, and the ECB is in that moment not able to do what it needs to do, and then suddenly you have a default or some kind of cataclysm. Things become political. We have not seen. I mean, we've seen this sort of the soft side of Giorgia Meloni. She might just do whatever it takes to stay in power, but she's not going to pay any political capital to keep the Eurozone together if nobody else wants to keep the Eurozone together. She's not a Draghi in that. She's not campaigning to leave the Euro. You're absolutely right. Nobody wants that. But the question we also have to ask is, this is not a question we can discuss in isolation. The question is not, do you want the Euro, do you not want the Euro? The question is, do you want the Euro and accept huge fiscal transfers, or do you not want the Euro and don't have those fiscal transfers? And that you might get a different answer to.
So in a sense, what you're saying is it's really back to this sort of idea that the institutional framework's not set up correctly, and unless you've got the right people in there at the right moment when the crisis hits, you have challenges. And I suppose as you articulate, the politics in Europe has changed so much in the last decade with the advance of the far right and to a degree the far left. So that kind of changes the dynamic potentially when you get to the next crisis point. Do you have any sense of what? I mean, I know it's highly speculative. What might cause a crisis? Are there thoughts that go through your mind, or things that keep you up at night that could be the risk?
Okay, let's go through the numbers. The first and most obvious is a fiscal crisis. We're seeing deficits very high, governments struggling enormously to contain the deficits. And it's always what happens in Europe. And in this point, the conservatives were actually right when they said, don't have fiscal stimulus because you can never take it back. And that's exactly what happened. They put in the stimulus package like a VAT cut for restaurants. This is the thing that they're discussing in Germany right now. VAT cut for restaurants through the pandemic. And now, obviously, pandemic is over. They want to take it back, and people are up in arms about it because the restaurants are still not full, and people are complaining. They even go to the Constitutional Court now, which I don't think this has legs. But it's you can see how difficult it is to give to undo a fiscal stimulus. I mean, the German finance minister was once asked to whether he can't just send people a check in the post as the Americans do, and he said, I actually don't have their addresses and I don't have their account numbers either because of data protection laws. And it's actually not a joke. They have no means of delivering a fiscal stimulus in the way the Americans do, and the only way they do it intermingles the fiscal stimulus with the classic, question of who should get the money, which once you do fiscal, when you mix that with fiscal stimulus, you get into an awful lot of trouble, because the people who need the money are also the ones that most likely to demand that they keep the money, and that's happening everywhere in Europe, and that's why the problem arises. Germany is different. We can talk about the German Constitutional Court. It has a much stricter fiscal rule than the EU, and it basically tells the government, you've got to, they try to cheat this, and that didn't work. They tried to put money outside the budget into off-budget vehicles. I don't want to go into the details. We can spend hours discussing that, but they basically, during the pandemic, they had a huge fund, off-budget fund for COVID, and then they got themselves another when this government came to power in 21. They had another fund for the economic, they call it the Economic Resilience Facility. And when they came to power, they shifted money from, and a climate transition fund. So, and what they did, they used unspent money from the COVID fund and put that into the climate fund and into the economic transition fund. And the court basically says all this stuff you can't do this. The COVID fund was for COVID. You can't just, turn this into a personal slush fund for your favorite projects. The Greens always said, to their credit, the Greens always said, look, we need to get rid of the debt brake. So what they did, plan B, was to cheat, and that's what everybody did. The court has now stopped that. So now they have the choice, basically three choices, getting rid of the debt brake, for which there's no majority, declaring a state of emergency, which would be hugely unpopular. I think the finance minister probably would not survive that cataclysm, or making savings. And we're talking for the next fiscal year, which is then a lot of numbers like 100 billion and 60 billion, but then the numbers that I'm hearing is between 30 and 50 billion for next year alone, that they need
in savings. That's savings.
Yeah,
right.
And this is a 4 trillion economy, close to, in euros now, close to 3.9 or so trillion euros. So if you do 50 billion in savings, that's like 1.4% of the economy. It's a huge austerity package. In fact, this is an austerity bigger than what people did in the Eurozone crisis. I mean, the Eurozone crisis only became as serious as it did because everyone did austerity. Now, this is Germany doing austerity. Now, this time the others are not doing austerity. This is an interesting one, where Germany, the strongest country with the strongest fiscal position, their debt to GDP ratio is only about 65%. It's perfectly fine. Much better than the UK, the US, France, anybody. And yet this is the country that feels the greatest need to be fiscally conservative. So what we're seeing is a massive fiscal divergence. And that is, to answer your question in the beginning, because that was a long answer, to answer your question in the beginning, that is where I see the crisis arising, a fiscal divergence that leads Germany to say, look, I mean, we've been sacrificing, we have not been investing in digital technology as much as we wanted to. We couldn't spend the money on defense. We couldn't spend the money on as much on social transfers. They had plans they had to abandon. The Greens didn't get their climate transition fund now, that will have probably, abandon a lot of their projects. And now we're asked to bail out Italy, which basically did all this, what it wanted. They had this irresponsible housing renovation scheme, which cost a fortune, where people could borrow like 110% of the value. I mean, just incredible amounts funded by the government. And these, Germany didn't have that. And the politics of this is going to be absolutely toxic.
Yeah, because there's so much that comes out of that. The idea that Germany is going to have a fiscal tightening of 1 to 1.5% of GDP next year, when the economy is essentially flat. It's been flat for 12 months in real terms, and of course the global economy, perfectly plausibly, certainly be our view, will slip into a recession next year as America slows dramatically from lofty growth rates, and China remains under pressure. So this is a terrible time to do a fiscal tightening. I mean, it couldn't be a worse time, really, I would have thought. But what is that? There's so many implications for that. I mean, not only the economic implications, but funding Ukraine, the energy transition, the defense spending that's meant to be picking up meaningfully in Germany. Where does it leave all these things, let alone the issues about a potential Eurozone crisis that we can come back to in a sec?
Yeah, I mean, Europe has a lot of, as you mentioned in your list, Europe has a lot of things it needs to do, and it hasn't done properly, like defense spending. It has not. Germany in particular has not fulfilled its commitment under NATO agreements. Germany has a massive need for climate transition, because Germany is by far the worst CO2 producer in Europe. It's the largest industrialized country as well. That's obviously the reason. So Ukraine is it's going to be a huge problem. We already, the Germans have just increased their weapons supplies to Ukraine from 140,000 a year to 160,000. So this is a small increase, but this is as far as they can go. The Americans deliver like 10 times as much, and it's without the Americans, there's no way the Europeans can fill that gap. Absolutely no way. And should Trump get to power, which is obviously not a 0% probability, and end the war or end support for Ukraine unilaterally, he might not end the war, he might just end support for Ukraine. There's no way the Europeans could get in. So we could have a situation where the Russia-Ukraine war flares up again, but in such a way that Russia would actually be able to take Ukraine, because the only way what stops Russia from taking Ukraine is the large and continued Western support. But when politicians like David Cameron say we're going to support you for however long it takes, and or Biden says this, Biden is a man who's 80 years old. He cannot make a promise for however long it takes, because he has got only a year in power, and who knows what's going to happen in the election. We can make very short-term promises in our democracies. And in the UK, politics is pretty constant. Labour Party will not change the foreign policy much, if at all. But that's not the case in Germany. There are now parties on the far right and the far left who campaign against weapons deliveries for Ukraine, and that has support. It's not a majority support. A majority of Germans are still in favor of helping Ukraine against Russia, and they're certainly no longer friends with Putin. But there are people who oppose the idea that Germany delivers weapons to countries at war. That's something that for many Germans is simply not acceptable. And these people have not a history of thinking things through strategically. Obviously, they will be shocked when Putin invades, and they said, "Who could have known that?" But it is for now their position. And my calculation is about a third of the population that holds these views, and this could split. There's a new party of the left coming up, which is, unlike the classic left, it is anti-immigration and anti-Ukraine support. So this is an interesting, new phenomenon. Somebody from the left being anti-immigration and being anti-Ukraine. So you will see some, a new dynamic, and in East Germany in particular, left-wing thinking and hard right-wing thinking merges. People will switch directly from a far left party to a far right party and backwards without stopping anywhere in the center. The far left and the far right are far more close together in their policies than the centrists are from both of them. So the politics is shifting, and that's where I see this happening. But we are entering a fiscal squeeze where we either have to stop lying about our fiscal rules and saying, look, we can't do this. We cannot keep balanced budgets. We have investments to make that we didn't make in the previous period. Germany is still a digital backwater. I just got the statistic that 80% of German companies still use the fax machine. It's very difficult to see.
Wow, I think that's a wow.
That's a statistic.
I don't think I've sent or received a fax for a decade.
Same for me. We don't have it, and I wouldn't know how to receive one. And when somebody, I know German doctors would regularly communicate with fax machine, and German health departments.
Wow. But let's just go back to that point about Ukraine, though, and then we can revisit a bit more of the fiscal stuff in Germany, perhaps, because, obviously, clearly, the vast majority of us in the West don't want Russia to win, and we support Ukraine. No two ways about it. So it would be tragic if that happened. But what are the actual implications for Europe if Russia did occupy Ukraine fully and the support for Ukraine went away? Because the energy side's kind of been dealt with in a sense. I mean, there's more work to do, but cutting off of Russian energy supplies has essentially happened. So what would the implications be, do you think?
A complete occupation of Ukraine would be a sort of a geopolitical catastrophe for both the EU and NATO. The more likely scenario that I see is we'll cut a dirty deal with Putin. That's the kind of likely scenario, that unless Ukraine achieves some breakthroughs, which it won't on the present and with its present state of deliveries of arms. If the current border is if this turns into a trench war, which it already seems to be, nobody's making huge progress on either side. I mean, both sides have victories and defeats. The Russians certainly haven't been able to make any sustainable advances. So it could well be that this current border or something near it is going to be sort of the border, basically. And while Ukraine will never be asked to recognize this, even in a peace treaty, it will certainly be possible to state the facts as they are, and for Ukraine to receive NATO protection along that border, so that there isn't going to be another attack by Russia, and to increase the stakes by turning Ukraine into a NATO member. I mean, Russia would be much less likely to attack a NATO member than a non-NATO member. So these are the kind of things that I see. But if your scenario came to pass that Russia was able, because Russia is actually increasing military production. We thought that when we imposed sanctions that Putin would not have the ability to do so, but we completely miscalculated. The sanctions have been probably the biggest strategic error the West has committed in generations. And it's and it is sort of a gung ho idea about, we have the dollar, we have the euro, we have these incredible power. The West is running the world. That's just not true. The West is in purchasing power terms, 40% of world GDP. All our hostile actions, our sanctions, our coercion has led other countries to adjust, and this is what happens. The Russians and the Iranians have now payment systems based on Bitcoin. The Russians and the Chinese are both developing payment systems. Alternative trade routes have been set up between to link countries. Kazakhstan is now a huge gateway for Western consumer goods into Russia. And so is the Middle East, like Qatar and other Gulf states. So this is now a situation where it could happen if Trump came to power and suddenly stopped everything. That would be a scenario where it could happen. But Putin would say, well, in that case, I'm going to be able to do this. I'm going to be able to invade Ukraine because the West Europeans are not going to stop me. And that is the scenario where that could happen. And that would be a hugely counterproductive scenario. So I think an effort will be made next year before the US elections for this thing to come to an end, because nobody wants to take that risk of a sort of a cataclysm. And the Europeans at the moment, they all declare their support and have picture opportunities with Zelensky, but there will come a point in the spring, I think, when unless Ukraine makes huge progress, or at least discernible progress, there will come a point when they will put pressure on him, saying let's cut a deal. The question then becomes whether Putin wants to cut a deal. Putin might decide to wait, because for him it might be better to wait until if he might speculate that Trump will win, and he would certainly be easier for him with Trump than with Biden, but possibly the West can make him an offer he can't refuse. This is also there are also things he wants, and if he gets the land, he gets access to Crimea, land access to Crimea, he would get pretty much the control of the Black Sea, at least the eastern part of the Black Sea. This would shift his sort of position in Europe. Certainly, it would strengthen his position. The West would have to do quite a lot of things it wouldn't like ending all these international court proceedings against him, stopping the sanctions, all of that would happen. And the West might find that very difficult to accept, given what we've been saying about him, about his war crimes and his thing to kind of deal with him that basically resurrects the old status quo just for the sake of ending the war. That might, however, be from a strategic point be the least bad of all options, because the least bad, the worst is the one that you mentioned. And if he were to able, Ukraine is not far from Germany and from Poland. I mean, Ukraine borders on Poland, but even though when you're in the east of Germany, you realize it's only a couple of hours, 3 hours drive away. Ukraine is extremely close to, it borders on Slovakia, it borders on Hungary, but it's this is a small part of the world. If you are in Austria and Vienna, it's not far. Really not far.
Yeah.
So if they had the Russians, on the Ukrainian Hungarian border, Moldova is another sort of risk. If Putin were to get Ukraine, what would he do with Moldova? He would, that would probably be just another sort of detour for him. And then he's sort of bordering Romania. So I mean, this is sort of strategically. He would eat deep into sort of Central European territory, which is clearly not in our interest for that to happen. The eastern provinces of Ukraine, by contrast, are a long way away from European territory, so that will not affect Europe at all. So I would think that there would be an attraction. Remember Giorgia Meloni? She talked to. She was tricked by 2 Russian pranksters who called her on to say that they were members of some African organization, and she took the call and basically said to them, look, we're all tired of this, and and she said she had a plan to end this next year. And while I'm not sure whether that's true or not, that's the thinking right now. They all want to end this. They don't want this to continue. It's the same impression.
It's a headache.
I'm getting this from Berlin as well.
Yeah. Interesting. So let's keep going on Germany as a theme, because clearly that's a challenge for Germany of significance. The budget you mentioned, but it strikes me when you think about Germany, it's been the sort of economic dynamo of Europe for a long time now, and in fact, in the last 10 years, unusually, I remember 10 years ago talking to people about the idea that German house prices might be an area that would do very well for a long period of time. And of course, the German housing market's become very expensive on the back of cheap money post GFC. And now, of course, that trade is reversing at the same time as China has entered the global car market. And I was in China 2 weeks ago visiting with BYD, and the charts of the exports of Chinese electric vehicles around the world, a pretty dramatic growth in the last 2 or 3 years. So, and as we know, Munich and the car industry is Germany. It's a massive part of the industrial base. So it strikes me, not only has Germany got these budget challenges, but it's also got the challenge of a housing market going into reverse after 10 good years or 10 plus good years. And it's got the ascendancy of China, which now has a production capacity of, I'm told, 50 million units per annum of cars, particularly electric vehicles. So where does this leave Germany? Because it strikes me that having had a glorious decade, it faces a really tough decade. And I just don't see any obvious way out. I'm just interested in your thoughts on that.
Yeah, I think you're right. I mean, the glorious decade, and there was glorious 2 decades, and I think it's probably worthwhile just looking back at those 2 decades and see why Germany was so strong, because that explains also why Germany is weak today. Germany was strong for 3 reasons. The first was globalization. Globalization favored Germany's. Germany was a strong trading partner, it had large surpluses, so that favored Germany. The second was the supply chain revolution. This was a technical revolution. Just-in-time deliveries. German production companies were able to offshore some intermediate productions, not final productions. They didn't do what the Americans did, but they turned their production process into sort of a huge global network, and that network was sort of tuned to the most efficient way, and so they became super productive. And the third factor was the fact that Germany was able to depress wages while being locked in a monetary union. Germany was the biggest beneficiary of the monetary union, but what they did through domestic welfare reform policies and labor reform policies, they were able to depress their wages. And that worked relatively because no one else did this. You can only become more competitive if others are not doing the same thing. It's not like it's not like that is the kind of game. It's like winning a football competition. It's only one person, only one team can win. That's not the kind of thing which the kind of economic game we normally play. Normally we can all trade as a win-win game. We're not you specialize in this, I specialize in this, and we both benefit from this deal. It's a good deal. But what Germany did was not of that kind. It was this zero-sum game type of economic policy. Now, this is what made Germany strong, and it fostered, or it nurtured its sort of high dependency on pretty dubious political relationship, because they realized that since Germany is not a country with natural energy energy sources, nor is it warm, nor is it windy. So even for renewable energy, it's not a great place. So they got their gas from Russia, and they got sweetheart deals with China for exports and investment. And they bet the house on the industry, heavy industry, medium heavy industry, small industry. Basically, it was an industrial strategy. And I remember in 2019, the German economics minister, Peter Altmaier, was the last economic minister under Merkel. He said that even though Germany had one of the highest shares of manufacturing in GDP, the strategy was to make it even higher. Which I thought was just completely crazy, because this is unsustainable. I mean, have more smokestack industries at the time when you have to, have an energy crisis, an energy transition. That doesn't seem to work. But it seems to be that this was done in this was sort of a bubble creation. And then the pandemic came, the war came, the economic circumstances shifted. And this whole thing collapsed. The war and the pandemic shifted the supply chains. Companies no longer optimize the supply chains. The globalization has shifted. It's not deglobalization. That doesn't characterize it fairly, but it is we are retreating into a camp. There's a Western camp, there's an Eastern camp. Germany used to be the fence sitter, and that strategy no longer works. They have to be, they were forced to join the Western camp now. So Germany is imposing sanctions on China in a way that it did not do this before. So the supply chains, all of these factors, and now the cost of productions in Germany are higher than they are elsewhere. The effect of the wage cut, of the wage moderation of the late 2000s, 10s, and the last decade has now evaporated, and now the opposite effect is coming in. What a country should be doing in a situation like that is diversify away from those sectors. This is the natural thing. If these sectors, bulk chemicals as an example, is no longer competitive, be fine. There's still good chemists there, so there's nothing wrong with developing new products, developing new ideas, developing new technologies, but produce them somewhere else. That would be the natural way of doing this, but this is not the way the government wants it. The government thinks it wants to keep as many steel companies, chemical companies in Germany, transit them from the current energy sources to some future green energy sources, and paying huge subsidies for that transition. And that's what these funds, these off-budget funds were used for, to give massive these subsidies are just mind-boggling. Much bigger than defense spending. They used to be a fraction of the budget. They're now like the biggest item in the budget. These subsidies for companies, industrial companies mostly, so they can actually stay alive. They're not particularly profitable, and these are this would probably work if this was a 1-year recession, like a stimulus program. You see the whole economy falling to a hole, and you just as what happened with COVID. Everybody in the whole economy fell down, and everyone was financed for a short period, and then things were fine again. That was not the case. This is a semi-permanent subsidy, and will if anything hinder the transition, the long overdue transition for Germany. So it's not a matter of a strong economy suddenly becoming weak. It is it's basically the oil tanker phenomenon, where it's fine if you have to, if the sea is calm, the wind is blowing in the right direction, but suddenly, you have to maneuver in choppy waters, and it's not, the oil tanker is probably not the best vehicle to do this.
Yeah.
Now, the car industry that you mentioned, that's a very interesting story, and I've been sort of following this for a very long time. It's much worse than you would think. The Germans were, again, they bet the house on the diesel technology. They were the world's leaders in this. They developed this, and they developed the modern versions of this, and they made a ton of money with this. And this is why they when we looked at these diesel scandals of the last decade, it was kind of commercially, the reason why the bosses waved it through and allowed that to happen is because the future of diesel was so important to the profitability of all the German car companies. At that time, the China, you mentioned BYD, they started to invest in electric cars. They started, more importantly, to secure the entire supply chain for the next generation of electric cars, from magnets and rare earth magnets to all these lithium and all these components that enter both the production of batteries but also the production of electric engines. And they developed software, so there was, they are fairly advanced in automatic driving and these things. The Germans have basically resisted this, and the German companies, until they were forced to, and then they realized, oh my God, we're kind of late, and then they put a lot of money into this. The problem is that what happened technologically is the new car. A new modern electric car is not a car with a software in it. It is a kind of a device, a digital device. When I test drove one of the models, it felt like it was an iPad with wheels around it. It didn't feel. The Germans are real cars, mechanical devices that try to integrate software in, more or less successfully. But it's a different product, different mindset, different kind of managers.
It's a very, very good point. I mean, it's exactly what they were saying in China to us 2 weeks ago. It's an experience. It's a digital experience with wheels on it.
Exactly, and that's not what German car makers do. I mean, the Germans, they were the biggest sort of exporters to China, especially in the old technology, but they're not doing any headways on electric cars, and they realized that BYD and the others, that they all had karaoke machines in their seats, and you're not going to have a BMW with karaoke machines. It's not something they do, or they would have thought of even, because engineers don't do that.
It was fascinating to be in China and to drive one of the new electric vehicles that was designed specifically for women, for a special experience for women in terms of when they're in the car and the way it interacts and all the digital paraphernalia, just for young women. I thought it was quite. I mean, I maybe Volkswagen have designed a car for young women. I'm sure they have, but not one that's an experience to that effect. That's so interesting and fascinating. But so let's just take one little step back. So if Germany hasn't been the sick man of Europe for the last 10, 20 years, it seems like they probably are going to be. And if that is correct, who will take up the economic sort of running in Europe going forwards on the next 10, 15 years? Because as you articulate, it's like a tanker. Also, it's cyclical, isn't it? Germany devalues its cost of its labor. It then does very well competitively for 10, 15 years. It becomes expensive again, and someone else generally takes up the running. Would that be France? Would that be parts of Southern Europe, perhaps? I don't know. What do you think?
I don't think we will see that. I don't think it will be. Germany is in that sense irreplaceable. That Germany is the largest economy. No smaller, even a smaller dynamic Italy. Italy is not dynamic.
But if that's the case, then Europe is weakened, significantly economically weakened.
That's what it is. And I don't think there's any way of sugarcoating this. I would not talk about the sick man of Europe. I think this has always been an expression that commingles cyclical and structural shifts. What we're seeing at the moment is both. Germany is in a cyclical downturn, that's very clear. There is an element of a cycle, so the industry has different economic cycles than services. So once the global economy turns up, Germany will benefit more than others. It's always that Germany benefits in the upswing, but it is weighed down by structural downturn. So the upswing will not be as strong as it would normally be because the structures are going down, and the car industry is a big factor. The car industry indirectly, with everything together, accounts for about 11% of the economy. This is the largest percentage of any economy. Very difficult to measure that, because if you only measure the car industry itself, it's a much smaller number. But there are suppliers, there are services companies, there are, the company, it's such a highly networked industry. So this is not something that you will, as this sort of industry declines, it won't decline to zero. The Germans will still maintain the upper market niches will still be their thing, and it will be a profitable niche, but a smaller niche. The reason why German car companies are making money is not because they're selling Porsches. It's because they're selling, Volkswagen Golfs and Opel Astras and all these sort of mid-sized cars. That's the kind of market where they will struggle. Europeans, they will probably protect themselves against Chinese imports with tariffs. That's clearly on the road. So there will be sales. But I would assume that people will be much more, if the product is kind of second rate and it doesn't have the kind of quality of foreign suppliers, you will not compete, you will not make the big money. That's probably the bigger issue. It's not how many cars you sell, it's how much money you make with those cars, and that's not the thing. So we're going to see this structural shift, but we see this in other countries too. France has, because of its industry, it's less dependent on industry, more dependent on services. France will not perform so badly in the downturn. They haven't made these huge policy errors that the Germans made on energy. They have a much smarter energy policy. They are running deficits, which is, in my view, too high. But at this moment, the German one is massively, especially if they do the savings, would be massively too strict. So there is France would probably be closer to a reasonable level, an appropriate level than Germany would. And therefore, that would also help iron out some of the cyclical fluctuations that would otherwise occur. So generally, France, I'd say, is better governed than Germany, and certainly more modern, but not strong enough to take over the sort of a lead role in Europe. And I think the times where a country does that are over. Yeah, I think one should probably also not look at Europe so much in terms of the French, the Germans, the Italians, but as the Eurozone as an economy as such. The ECB does that. They obviously understand that different policies have different effects. But you get a much better picture, clearer picture of Europe, where Europe is, when you actually look at this sort of as aggregate Eurozone level. Like in the UK, you wouldn't say the South is doing this and the North is doing this. This is important for the political debate, but if you want to understand economic dynamics, it's confusing to actually, start to disentangle this into too many, to fracture this into too many parts. Same with Europe. The EU is in a structural crisis, and the Eurozone has weak economic growth, weak structural growth, and that's the key to debt sustainability. It's not the level of debt; it is the fact that this capacity to service the debt will be massively reduced as you enter into the sort of structural crises. And also we are the anti-immigration policies are another economic issue, because Europe has a declining population. The decline is kicking in right now, so the labor force is falling. The needs for immigration is so massive. If you just wanted to keep the labor supply in Germany going, you need hundreds of thousands of skilled immigrants each year. And if the policy reverses and turns anti-immigration, as it does everywhere now, we discussed the Netherlands, which will be very anti-immigrant after the Wilders takeover. So we are moving to a policy like the UK too. We have a policy where the country needs more immigration, legal immigration, but politically that is not possible right now. So this is not a, shall we say, an economically optimal condition, but it's what politics demands, and ultimately politics trumps economics in this respect, unless the economic situation becomes so dire that the politics changes in turn, which is not the case yet. So and that's why I think there is a structural weakening going on in the Eurozone as a whole, which, when coming back to our original point, this is also a very big factor for its sort of long-term financial stability.
So so it's a long list of challenges that Europe has, from demographics to energy to the car industry to low trend growth and to ultimately debt sustainability. It sounds from what you've been saying over the last sort of 3/4 an hour or so that you would put a high probability on a debt crisis, a re-emergence of the Eurozone crisis at some stage in the perhaps not too distant future. Always difficult to know what the trigger is, but with interest rates higher now and therefore interest bills eating into government revenue, that brings it much closer in terms of timeframes. Do you have any sense on that timing or trigger points or factors to watch?
Yeah, trigger points are, it will be some external shock, something we haven't foreseen, like the Eurozone crisis back in 2010. I mean, who would have foreseen that the Greeks had done what they did? That was unforeseeable. Even experts on Greek policy would not have foreseen this. So the trigger point is probably also not the most important thing. It's just that, when you see that something is not sustainable, it ends. And then the question then becomes for an investor, does it end sort of within my horizon or does it end outside? And I don't know. We cannot honestly predict this. What we can, however, say is that this is not sustainable and that I would probably not, I would probably take this into account. That all these preferences the Europeans express at the moment, like, as you said in the beginning, it's a high approval rate for the euro, but a very low approval rate for the policies needed to sustain it. So, how do you resolve that conflict? And therefore, in the end, there will be, I would expect some accident to happen somewhere. My bet would be a political accident, but it could also be, a bank going bust. There is, we are hearing at the moment the ECB warning about financial stress may be sort of visible in parts because of the rise in bankruptcies. Now, if you think about the German car industry, if there were major problems with the German car industry, there's a lot of banks that stand behind the German car industry. Now, if the German car industry were to go down the drain, let's take this sort of extreme example. This would be a financial crisis. This is not it's not just industry. It's not like the mining, the end of mining in the UK. That's different. There's a lot of money tied up, and a lot of finance. So this move out of industry is going to be very serious, and there can also be the hypothetical possibility of a China-US war would completely do it. That would be a sufficient criterion for that. Or a Trump presidency, for which Europe, they're now talking about this. They're not as complacent as they were in 2016 when everybody dismissed the possibility completely. No, they're not. They're more prepared for it today, but they actually haven't made preparations. So there isn't a budget provision to say if Trump becomes president, we need to double our defense budgets. And if we double our defense budgets, we either need to accept higher debt or we need to accept lower social spending, or most probably some combination of the two. These budget plan, the EU doesn't do that. The EU is sort of whatever they're discussing today. They're not making preparations for these eventualities. It's always a case of we'll wait until it happens, and then react. Yeah. But by the time you may, if you don't have a plan, it depends very much on the gut instincts and the kind of narratives people develop at the time and what it means. And it could also be that people say, oh, well, Trump will come and he'll go again, and we'll just have to tough it out for 4 years. They might make mistakes or console themselves with the fact that Congress is in Democrat hand, if that is indeed the case. So there are various ways of not solving the problem. There are more ways of not solving the problem than solving the problem.
Kicking the can. So what about
what they do?
Yeah. Before we, as the clock's ticking, let's just shift it around a little bit, because it'd be really nice to get some thoughts from you on France. I mean, you've touched on France in bits and pieces, but I know we've talked before about the breakdown of the sort of national social consensus, and then of course you have the Gilets jaunes and all that sort of stuff going on in the background. How do you see France in all this? You mentioned the service sector. Of course, it's much bigger. It's a different kind of economy. But politically and economically, how do you see France at the moment?
France is a big risk. There is a possibility that Le Pen will win the next presidential election. We cannot rule this out, and you cannot take consolation from opinion polls. just as we couldn't do in the Netherlands, because opinion polls are in France always hypothetical, because you always have to ask the question, would you vote for her in the second round if she was a candidate? I mean, people never get asked this, you can never ask a straight question there. And it depends very much against whom she would be in the second round. She might be in the second round against a candidate who may have just squeezed by in the first one, but not, then collapsed in the second one. So there are factors that could still ensure that she becomes the president, and the left is no longer as, the left used to think that the center was the lesser evil than the right. That's the classic thinking. But as as I gave you the example in East Germany, the left is closer to the far right than to the center, and that's starting to happen in France too. That a lot of, not the center-left politicians, they hate the right, but the center-left supporters, the voters, they are becoming sort of anti-system, anti-everything. And, if the left doesn't deliver, then they vote for the right. So they're pretty much, and there are now two parties of the right. There's Le Pen's party and the party of Eric Zemmour, who is aligned with Le Pen's niece, Marion Maréchal, and they offer sort of two versions of the right. Maréchal more like a Meloni version, pro-NATO, so that she's not sort of completely anti-EU and that, but she's very strong on immigration and strong on other central right themes. Marine Le Pen being much more radical, although also like Wilders toned it down more recently. And as we're seeing, same as in Italy, the slightly toned down version of the radicalism is winning support. And you could have a situation where in 4 years we have Meloni in Italy, Le Pen in France, you have Wilders in the Netherlands, and the German AfD by then may have 25% of the German parliament. Not enough to be in government, but 25%, it would be the official opposition party. So you would have a massive change in the political landscape in Europe. And that is not a scenario that is conducive to the, to the measures that I mentioned that need to be done in the Eurozone. And, this is not just rescue mechanisms. The Eurozone needs a capital markets union, which it doesn't have. It needs to complete the banking union. The banking union was a big project of the last crisis, but it hasn't been completed. They have to supervise the joint supervision, but they have a essentially dysfunctional resolution regime. And they have no deposit insurance schemes for the Eurozone as a whole. So the whole thing is not done. I also argue that once you have a capital markets union, you will probably also need debt raising and taxing capacity at the level of the EU, so that you get a safe asset like like treasuries. That also is not happening. So it's not just about instruments, but it's also about making sure that you have economic policies or economic institutions that would allow a country to make those shifts. At the moment, everyone is shifting by themselves, and the Germans and French are shifting in completely different directions. And this is where I see the main danger. As for France itself, when
you say Germany and France shifting in completely different directions, what do you mean by that?
Well, energy policy are completely in opposite directions. Defense is different. The Germans have just made a huge order of Israeli air defense systems when they could have cooperated with the French. The German is an industry-based based country. France is a service-based country. They're now pursuing very different interests. The French are now very much in favor of, for example, tariffs on Chinese goods, which the Germans are not, because they would get hit. So basically, France advocates tariffs, knowing that the counter action would hit not their but German companies. So that's the kind of games that are currently being played at the EU level. And at the same time, the Germans, because they formulate policy very much without any reference to anyone else, as they always have done, have lost a lot of friends in Europe. So Germany, for the first time that I can remember, is on many industrial policy issues isolated in the European Council. And that's a much more difficult position for Germany to be in. It's an unusual situation. So France is, however, not able to lead the EU. This is not a thing that France has. It's been, it's always taken the national interest first. And that's obviously, there's a price to be paid. You basically you have gains from that, but also costs from that. So I see France is not so exceptional that its economic performance is much better than that of the rest of the Europe. So a lot of the problems, the country has been split. I mean, the support for the center has weakened, and it depends very much on the candidate who will follow Macron. He cannot be re-elected, so he was a unique political figure. A person. Think about it as a person. Just think about the UK. If you had a political figure who went outside the existing party system and won an election. Impossible because of the first past the post system. But in France, it's also difficult. It's not easy to have in a presidential system in France where you have to enter sort of a very expensive election contest to make it to the presidency. There isn't anyone on they have a number of characters who have been more or less popular, some more dynamic than others. But there isn't a Macron on side. There are sort of mini Macron, sort of little, people who have who look like him or who have a similar thing. But it isn't. They don't have that level of support. They don't have that organizational skill, and they don't have the networking skills that he had. He was quite unique in that respect. The fact that he was able to create a movement in almost no time. I've not seen that happen in European politics in the center. I've seen this on the right and the left. Wagenknecht, the German left politician, she's done this on the left, but nothing of the scale that Macron did. I mean, he got everybody behind him, the entire center behind him. This was an amazing political coup. That I have not seen anyone achieve elsewhere. Everybody's much more gradual, and there isn't anything like this in France. So Le Pen is probably the most sort of experienced, clever politician. She has moderated her tone, that sells, that works for her. She has a platform in the French Parliament, which she lacked previously, but she's now very strong. She has a very strong representation in the National Assembly. The signs are, and the next European election will be very, very interesting because there we will see this test. There we will see how well the right will do, because the polls don't tell us that. We will see how they will do in an actual election, and then we have the various candidates of the right, and I also think that that Maréchal will at one point be a fairly serious contender, especially if Le Pen were to lose the next election. I think then it's over to the next generation, and she would be in a very strong position. So I think the long-term perspective of the Eurozone, whether it's 2027 or 2032, I would be surprised if the center were able to hold on to in French politics until then. And if France falls to the right, Italy falls to the right, Germany is torn. That's where I see Germany. Germany won't fall to the right, but Germany will be torn. Netherlands at the right. This tells us that there is a backlash going on, a political backlash that has to work through, and where the Eurozone and stability of the Eurozone is not paramount anymore. And it is that scenario where a crisis could occur, and where, if it were to occur, there wouldn't be the sort of 2011, 2012 spirit where somebody says, that's enough, we'll do everything to support it, because they will not do that.
I think that's fascinating. I think that's a good note to leave it on. That's an interesting conclusion, drawing together a lot of what you've been saying. And I really appreciate your time, Wolfgang. It's been fascinating, and it's going to be a very interesting situation to watch. So thank you very much for joining us.
Chris,
much appreciated.
Thank you for the invite. It was a pleasure to talk.